The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, going back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. And coming to you live inside Tiger TV and also inside the e-Signal platform. Let's check out where your markets are at right now. And go over, let me switch back on. Sort of watching on these indices, seeing if we're going to get a bounce. We're going to keep going right here. And tightening up stops. If you're short, I'd be tightening them up. And we're looking like we're hitting some pretty heavy support there. And coming down on the lows from the early morning, late night session there. And looking like we may bounce off that on the Russell. Let's see if we go over and look at NASDAQ. We actually are doing the same thing, but not quite as low. We haven't hit the lows like we have on the Russell. We're literally just a few points off of the bottom from last night on the Russell. But still showing some resistance. A lot of times you'll see them all turn around at the same time, so watching just in case. We are coming into a heavy support zone as well over on NASDAQ from about 3 a.m. this morning. So just like I said, keep an eye on those zones, not jumping the gun on them, but I'm ready, and I'm tightening my stops and just trailing my stops on down with it as we've had just a beautiful run down. And sort of hard to miss it, just straight down so far. And just now starting to get some oscillation on that. Had a couple bars along the way, but we'll see if we get a third bar that does the same thing, that we might turn around. We'll see. All right, well, while that's up, let me go in and talk about where the markets are at. We got the S&P is down 11 points right now. We got the Russell is down almost 8. Dow's down 118, and NASDAQ is down 24 points on the day from yesterday's settlement. If we go in and look at gold, gold is currently in positive territory, up 6 points. We got natural gas and oil looks like are both down on the day. We got natural gas is down 0.0015, and oil is down $1.15. So some nice moves on oil. Looking on over at corn and soybeans are both positive for today. Both corn is up 2 and soybeans is up 2.5 points. Dollar index is in positive territory, where bonds are slightly negative. Euro dollar currently up 34 pips. Euro yen up 35. And euro pound is up 84. Looking over at the pound dollar, it is down 113 pips. Pound yen down 146. Dollar yen is down 13, with the Aussie dollar down 97 pips. We've had some fantastic moves. And we got the Aussie dollars down 84 pips. So basically everything with the yen and the Aussie there has been just fantastic. Dollar franc is currently up 44 pips, and the dollar CAD is up 68. Silver also is in positive territory right now, along with gold. It's up 0.034. Okay. Like I said, we got some, a little bit of a battle going on. And let's see. We can look at a few things. We got a little bit further to get down to the lower point here on our zones here and on our ice. So coming right into ice there, which is also lined up with a resistance, support zone at 42.38. And we broke through it a little bit on Russell, and it's hitting some pretty heavy support down here at 1131. So, is there a little more strength, or is it done? It may not quite touch it, but it's got really close. And we can see on the upside there, it got literally within like just a couple points on the upside before felling, coming on back down, and almost coming all the way down to the bottom. But again, it got really close. Let's look at that, because I want you to notice it. Close works in trading, okay? Unless it's binaries, then close doesn't work. But it got literally just within just a little bit of our upper ice zone, and it's coming down, and like I said, in that support area. So we're looking for a high potential bounce here in the market. We'll watch that, see if that pops up for us. If it does, then we'll have ourselves another trade. Okay. But I'm not saying it's going to go long. I'm saying if it goes long, then I'm ready to execute. Okay. If it breaks below these levels, I'm ready to go. Let it execute and go short. So we just need to see some volume at breaking below, and it's going to have to break below the 0.5 deviation. You want to watch out for that because you're running into see all this resistance right here, or resistance to the downside support. So it's running into all of these order zones. There's just been a lot of lows here where institutional buyers have pushed it back up. You're coming to 0.5 deviation. That's a lot that Russell has to break through. Made for a great target. This whole zone's a great target. And I mean, it broke like basically level 1 right there, the lower end of ice, but then came right into those institutional zones. And again, we're right away from 0.5. We got more support zones. If we come over here, we came down and we had to get a great target. It broke through settlement, broke through point of control, went on down, and broke through, one strong institutional zone. This is a really small one, didn't have a lot of strength to it. Another one that's been lasting for a long time, and it came in, we hit right into that, sort of bouncing off of that before hitting the lower end of ice, and it's just taking its sweet little time. So we'll see. We're ready. If we do decide to go long, let's look at some of the potential choices. Okay, so let's come over here and let me see some of these choices of what we might want to go after. And what do we got? Okay, so right here, looking. Let me get this out of the way. All right. Looking on down here, and what we're trying to see is if we got the ability here to grab a good trade. So on the small caps, we can see the prices at 1132. We can also see that up here, 1132.5. We're going to look at our proximity. And all the current ones, I mean, it's just way too low. 32 points in the next 45 minutes. We're not going to give up that much. This one's not too bad if you want a cheap spread. $35, and it's just 5 ticks off. So that's a good close proximity trade. This one's actually positive proximity, but doesn't have a whole lot of profit potential for an hour and 45 minutes wait on the Russell, which is rather volatile. So I don't know if I'd want to dive in on that. Going on down, let's see here. What do we have? Let's see. We got here. And what's cool is you can just highlight the ones that you're interested in. Okay, like using the scanner right here. So, I got my list of what I'm interested in doing right there. And let's see what else we have. On the NASDAQ, we're at 42.48. We are starting to push up off of that zone. We can see right there. It's trying to push off of it. We'll see if it keeps going. Do we have anything? Nothing for the current hour because we slammed down so hard between 11 and 12. It sort of wiped out any decent spreads to buy. How do I know that? Okay, this is one thing that I think is probably one of the most important things to understand when trading spreads. How do I know that none of these are worth buying? Okay, the market is at 42.47 right now, the NASDAQ. The spread to buy it is up at 42.70, 42.75, 42.80. Okay? It's going to have to move like 20 to 30 points before the market's even where I bought the spread at. It's called an out-of-the-money option, okay? Or out of the spread. The market is out of the spread. So out of the spread basically means that it is on a buy, okay, that the market is below the floor of the spread. And people get really confused on these, but if you understand normal options, you don't get confused at all because, well, here's how they price the spreads. And this is what can make it confusing. They price it in risk plus strike, okay, like on the buy side, all right? Or you could say profit minus strike, or however you want to put it. But if you're looking at a NASDAQ option on Friday, it would be like 40 cents for, say, a 42.70 strike, okay? Or 4 ticks, $40, whatever. In this case, $4 because there's only one of them. But if you're looking on a NASDAQ one, $4, it'd be literally 40 cents, okay? So 0.4 in this case is every 0.1 is worth $1. So every 0.1, there's 0.4. So $4. Notice there's $4 of risk in the trade. Okay, again, $4 of risk in this trade. Why? Because it's 4 ticks. Now on the spreads, they always tick in a 1. Okay, very important. They always tick in a 1, and made it really easy. There's a little link right here. You click on this, and it pops up. It tells you that Nadex ticks in 0.1 on U.S. Tech 100. NASDAQ ticks in 0.25. A Nadex tick is always worth $1. On the NASDAQ futures, 1 tick is a quarter, and that quarter is worth $5. So all that fun information is right there for you. Makes it real easy to find it. It's that little chain link there on the left. But what I want you to see is $4 risk, which makes it really attractive to a lot of people. They're like, oh, I think it's going up. I'm going to buy the one that's only a $4 risk. Why would I put up $80 when I only got to put up $4? I'll make a fortune more. But they don't pay attention to the fact that NASDAQ is at 42.48. 42.70 is basically 22 points above 42.48. You're buying it 12 points above the market, okay? Because the strike, and people, why is it so high? What are they trying to screw me? No. Or trying to mess me up? No. 42.70 is the floor. So it doesn't start making money until it gets like in a large quantity, until it really gets above that floor as of expiration. Now, can it make some money if it moves up? Yeah, if it flies up, it can make some, okay? But it won't really get fast when you're buying it out of the market spread there, okay, where the market's outside of the spread, it's below the floor, until it starts getting close to that at least. And at the end, it has to be above that if you held it all the way. So why would you buy that? If you look at these are also $4 worth. That's basically just a bid offer spread. Look, this one has to go up to 42.75. This one has to go to 42.80. It's way, way above the market there. And you don't want to buy spreads that are really close. You want to get ones that are close. That's why we have proximity, and we're going to look for close proximity spreads when we make a purchase. Right there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And so, again, going through my iZone sharpshooter, trading method here. And basically, just it helps color the bars and helps me just, easily see, what I'm looking at in the market. And as a recap for you, looking at the NASDAQ and the Russell, I usually watch all four indices. I have two of them up here for you right now. And looking at what they're doing, both coming down into support zones. And as I said, looking for a bounce. And right now, we just got it just sort of, trekking sideways. It's working on that momentum right now. So the market is going into a chop mode. And they are gathering up, building up a position, most likely to push it higher, would be my expectation. I won't trade on my expectation until I see the confirmation, but I would not be surprised if we saw it soon. If we did see it, and let's just say we were focusing on NASDAQ, then what spread are we going to choose? Because we need to be ready. I mean, now, see, we just got our first green over here on NASDAQ. Hadn't broken up. So we haven't really had anything else flip yet. So I'm not all, excited about the color yet of everything. It's not like all long, but, I am very aware of of it, and I do see tick volume starting to pick up to the upside. So with that in mind, what can I do? What spreads can I choose? And let's make a couple trades, have some fun here, okay? So I can buy this one for a pretty good price. Right now the market's at 42.50, and the ceiling of this thing is 42.50. This is a pure premium trade. We're right at the top of it. I got about 1.7 points of downside cushion on the proximity, or 17 ticks, about 4 points. I can buy it down at 42.46.6. So that's one trade I can look at as a possibility. Let's see, what other trades do we have? Let me turn on my instant, makes life a lot easier. Okay, just got to be careful with that thing. So this one's deep in the spread. I'm getting to buy, again, 4 points below the market. I'm buying at 42.46. So that's one choice where I put premium in my favor, okay? So I can click on that, and I thought I had that selected. There we go. Now, what can I choose for the longer time frame? We want to have both of these. Now it's at 14, so I'm going to back off and wait for a second. And there we go. Okay. So let's go. We'll put that one in right there. And now let's also look down here where I got some nice prop potential, close trade, lowest risk. Let's see here. We're looking at all these teens. And 143 to make 157. That's not bad. Don't like that I'm paying $30 in premium. But we'll go for that. Okay, so we can go for that one right there. That's still about 2 points we're giving up. Not real, like I said, a big fan of giving up that much premium, but for the dollar amount that's put up, it's probably the best risk reward out of the group. And so I chose that spread and that spread up there. When I say that, what do I mean? I mean, I chose this in the money spread, which is the 42.40 to 42.50 spread. And I chose the 42.40 to 42.70 spread on these trades. We came off of very strong support on this side. And the market broke up. I got a long trend confirmation built into the bar. My trend flipped, and I just broke past my predictor level, which is where I would be looking to, have a few ticks above that as my trailing stop. We broke that for the first time with the green after some chop. So after the market confirmed chop, that's what the orange is, went green, going long. What am I targeting? Okay, that needs to be, one of the questions asked. So one, I need to figure out those spreads, and ideally I have them chosen a little sooner. I would have been on the radio show, slows things down a little bit. But I really want to have those spreads when I'm looking at, okay, there's a potential short entry or there's potential long entry coming up. I want to have that spread chosen before it happens, not after. Because I guarantee I gave up a little money looking around, talking through it, working on it. Okay? We'll talk about targets and stops when we get back after.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right. Let's check out where the markets are right now. So it's moving, slightly in our favor right now. We are looking for the market to move on up and go long, bouncing off that support zone over there, and it looks like we're bouncing up to back towards that lower ice level on the Russell, and we got, like I said, some slightly positive tick volume, and we picked out 2 strikes. So right over here. Buy at 42.47. So we actually bought a little bit lower than that, but about 4 points lower than the market, and 30 ticks, a little bit more than 30 ticks lower. So, and then we also, but we bought the other one a few dollars higher. So we're sort of waiting on the market to catch up to the price that we bought on this contract, and once it does, then we'll be able to be even more profitable on that trade. Right now, we're up about $80 so far, so not too shabby. And so we enter the trade, basically trend flip, turn long. We got the trend confirm flipping up. We have the trend bands going positive, and we're breaking through the predictor levels. MVP just flipped to add additional confirmation. So we have a lot of things going in our favor at the moment. Where are we going to be looking to target? What are we looking to potentially take profit at? All right, So looking at this market right now, obviously I'm going to be tightening my stops because we still have the ability to just punch right back down through here. But my initial stop, so what is my initial stop? My initial stop is when we broke into this zone right here, and I like to have them on the other side of the zone. So that's a pretty far stop. So unless you have like a trade with no stop loss, probably going to want tighter than that. So I'm going to look at current market price action. So what's the lowest it went since I got in? So the swing low. So that lowest low, I'm going to look at it's right here, put it slightly below it. It finally flips, it goes into chop. That gives me permission to move it on over to this lowest low. And now I am going to watch it very carefully. I'm looking at the predictor and the trend flip lines both and just watching them. So it's going to at least be at where this predictor line is now that the MVP has finally flipped. And I can make it tighter if I'm going to be a little more cautious, but I like to give the market as much room as I can to breathe. So that's where it's at on the downside. So I'm basically going to look at the lowest swing lows, okay? And then, because we swung low, we went up, we swung low again before going up, so that becomes a new swing low, okay? And then I'm going to look at the trend flip and the MVP predictor right there to be able to help me, I'm just trying to follow price action. I'm not trying to go, oh, there's magic in the indicators. It's just I'm trying to use something that's objective apart from myself, apart from my profit is this or my loss is this or, I want to use price action, so that's why I like swing lows. And then I want to move it a little bit tighter, but I don't want to put it like real tight on the bars because that's just asking to get hit every time there's an oscillation. So the indicators give me sort of just an objective way to set a trailing stop. So they also help me confirm what the price action is showing me. Hey, the trend is starting to move up. I'd like to really see it break out above this 42.54 area. So that really is the swing high from earlier. That's the one area that it really needs to break out above. If we look at that right there, let's see, the high of that's 42.54. And we're basically bouncing right off the 42.54 level. So I'm going to have a lot more confidence once we break through that. If we are able to break through it before we decide to exit the trade, we'll see. And we bought pretty low. We brought down like at 42.46, so we have some room. But if we are able to move on up there, then the next area I'm going to be looking at is the point of control settlement area. This zone is where I'm going to be looking to tighten my stops. So I would have been looking to do the same thing on the downside. So once we got over here and we closed inside this zone, I definitely want to be on the MVP predictors, and I want to be, moving it down, a few bars high, just trying to keep it right above these zones when we go into that area, because this is an area where it can easily flip and turn. So same thing when we come over here. If we move on up, we get into this. I'm going to want to start getting a little more cautious on tightening up because this would be an easy area for it to turn around. From there, I'll expect it to move on up to the next resistance zone up here, just a little bit higher. So we'll keep an eye on that position. You keep an eye on that position, and we'll see how it works out. Right now we have a stop sitting right around 42.43, and hopefully we'll be able to move it up, or if it turns back around, we'll be looking for a short. If we get out of the trade, we'll also still be looking for a long. So, I always am open to that long or short position, whichever one comes first. Okay. So, if I think there's a potential short setting up, I want to do what? I want to start looking for that potential short. If I think there's potential long setting up, I'll look for potential long. If I think either one could be coming up soon, then I'll look for both. So I prefer to take shorts personally off of resistance zones and longs off of support zones. So when everything lines up, I don't really like to hop in them again and again and again after they've broken through. It doesn't mean they can't work, but it just, I don't necessarily want to take, longs out of every one of these, little zones right here as it breaks through them. So it could be a very choppy, difficult road to trade. I find it's a lot better just to try to trade right off this and just set a stop. And, if you get a small stop, you get a small stop. Take the stop, move on, look for the next trade. So we'll watch that one, see where everything heads off to. And let me see, I'm going to load up something else on the side here. And let's see, we can look at Russell. Let's see how that one's doing. Oh, weird screen. Oh. Refreshing. Give me one second because I got something else loading up. while that's loading, we can also go through some of our other fun news for the day. That'll take just a minute. Okay. What do we got going on? Doing a quick review of the markets while the market's doing its thing. We'll go in and today's news. Let's see. Equities in Europe right here gaining, but fading off from their highs. So they went up, and then most of them came, off the highs right there, but did close strong. Stocks have been stumbling again, around basically running up and then losing their gains as we've seen. Now we're looking at them bouncing back up off of that. And let's see, dollar yen hit fresh highs above 120.5. So again, 120.5 right there. The dollar yen moving on up, and not new highs, not all-time highs, but fresh highs right there, moving on up. And got a love. Yen has been great to trade lately, along with a lot of the other pairs. And let me see here. Load this up. I'm gonna make my crosshairs thicker so they're easier to see. And then what else do we have? Going in, looking at. We got crude oil came out today. So as crude oil came out, what can we do with that? How can we use that to, our advantage? Well, you can trade it. I had a trader today. It says rises on inventory draws by biggest production rise in 8 weeks. So we've had the largest production rise in 8 weeks, but we had a rise on inventory draw. Let's look at that. Let's dive into that. All right. So we go over here, crude oil inventories, and we dive into the release. U.S. commercial crude oil inventories, excluding those in the Strategic Petroleum Reserve, declined by 1.9 million barrels from the previous week. So they've been increasing. This time they declined. Okay. And let's see. They have still remained levels not seen for the last 80 years. So meaning we're expecting them to go down. And they popped down, popped up, came on, and then, pulled on back last time I saw. Anyway, so they're really high, and oil isn't going up anytime soon because we have a lot of it. All right. Now, understanding that, I had a trader today came in, and he asked me, we can do this sort of on the side while we're just sort of watching this trade play out. Go over here, and let me see if I can pull this up. Just got to find that specific trade. Okay, so a trader was looking at doing oil, and they said, hey, I did this straddle. So let me open up the image he sent over to me. If I can get it to open. It's taking its sweet time. There we go. He said, was this a good idea? Was this a good trade? He bought the 46.50, 48. He sold the 46.50 to 45. Thinking, hey, there may be a big move on oil. Maybe this will be a good trade. I can do a straddle on it. And so I was looking through it with him, and I'm like, let me see your chart. And so he pulls this chart up, shows it to me. And because I look at it, and the first thing I see is we have a risk of 27 and a risk of 29. So, that's going to put our risk, at 56. And he shows me his chart. And I'm like, okay, so we're right at 46.50 here. And that means if we're going to have a risk of, what do we say there, 29, so 40, actually 31 ticks on that side. So 31 plus 27, and that would have been, 58 ticks. So that means to do that, we expect one side to, lose or win, or so its break even is going to be 58 cents above. So that would have put the break even to 47.08. Like right here is his break even. Okay? On the upside. And that's one side covering the other side's loss. He didn't make anything until that price level. Okay? And then if we go on down, it would have been 58 cents below that. So it would go down to 46, and then basically 92. So again, right down here, that's his break even. So we're like at the upper end of the expected move for the trade to even break even. And then it would have to go another 58 cents, so $1.08. So we're talking like up to 47.58. So basically to the high extreme of the expected range, or really to the low extreme of the expected range, for him to get a 1-to-1, meaning it has to move the full expected move for him to get that 1-to-1, and he has to take profit right away. That's going to be pretty challenging. So I said I would not do that straddle because, I mean, I'm banking on it busting through all those deviation levels and moving the full expected move to get a straddle. My probabilities are probably pretty low that it's going to hit all that. I mean, it may hit that, and if it does and I take profit right away, great. But beyond that, that 1-to-1 is going to be hard to get. I said what I would do is I'd actually do the exact opposite trade. Okay? And I would go in on this trade, and I'd do an iron condor. Because I could get how much? Well, I could make, again, the opposite side of the premium here. Okay, if I were to buy this one, I'd make up to $25 in profit. And if I sold this one 21, so we're looking at $46. Okay, that gives me, and this is a little bit different. Okay, so because I'm not paying that premium, so I make the premium on one side, and it covers the premium on the other side. So I actually get to go a little bit further than what I was laying out there. I was looking at, 46 ticks. So it'd have to move 23 more ticks before I even started to lose on the trade as of expiration. So I got a 69-tick buffer where I'm profitable or break even, up or down. Okay, so that's 138 ticks. $1.38 of movement up from high to low, where the market can move and I will break even or profit. Every tick less than that, I profit. Okay? To get a 1-to-1 loss on that, it'd have to move up 138 ticks. Or down, or not 38. Yeah. It'd have to actually move up 138 ticks or down 138 ticks for me to lose all the ticks that I could make on that trade. So I have a really wide range where the market would have to move even further than is expected for it to move for me to lose what I could potentially make on the trade. So if it's neutral, goes up or goes down, I can still profit. But if I do the straddle and it stays flat, doesn't go up that far, doesn't go down that far, then what? Then I don't make that much at all on the trade. And I can easily lose on the trade. I usually don't lose everything doing a straddle. That's why I like straddles better than strangles. But when the premium's that high, and it doesn't seem high, it'll look so low. People think, oh man, that's way too much risk. It's the exact counterintuitive. It's opposite of what traders think. They'll see 25, I'm risking 125, and they'll go over here and they're like, $21, I'm risking 129. Okay, one, you can't lose on both sides. It can't be both above 46.50 and below 46.50 at the same time. So only one of those losses is real, but both profits are potential. So that immediately helps the ratio a little bit. Probabilities are huge. Stay right there. We'll talk a little bit more about this when we get back. We'll check out our screen.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All righty, folks, we'll come back here to the Diagnostic Trading Hour. And we're currently in a Nasdaq trade right here, and going in and looking at this contract on the spreads. And for this trade, we using the iZone sharpshooter. And let me see here. I'm just trying to bring this up. There we go. And take one more picture. We'll try to anyway. Okay, if it'll let us do it for you. All right, so we're up, what, $400 so far on the trade. And what we did is we saw that we came down into support. We were getting really close to the lower ICE level. Looking at another indice, we're looking over at the Russell, and we saw that it just broke through its lower level and was coming down and hitting the lows. They're coming close to the lows of the overnight and coming right into strong support. bouncing on back up. This one's bouncing on back up on us. We're looking at a point now where it's obviously moved, in our favor. And like I said, we're up about $400 on that trade going along. And we chose two spreads. We chose the 42.40 to 42.50 spread and the 42.40 to 42.70 spread. The 42.40 to 42.50 spread gave us, we actually bought premium because we bought lower than the market, 42.46. About 4 points lower. The market was sitting right about 42.51, 52 there. And we bought this one a little bit higher at 42.54, but it moves faster. Okay, so notice how the lower premium trade, or the premium trade, the trade that pays this premium, moves a little slower than the trade that we paid premium on. So it moved a little faster. It doesn't mean we can't make money on both, right? We did both. But one of them just moves a little bit faster than the other, okay? So now we are establishing a new potential resistance zone. I'm very aware of that on my trades. And, could look to hop out of them if it doesn't break through. It's a brand new zone. It just formed off a little high right there. We'll see if it can hold or not. My guess is that we'll break through it. We're probably going to push up at least to this point of control settlement area. That's really where I'm expecting us to go. But I'm not going to let my opinion about being right and saying, hey, we're going to go here, control my trading. If it does, fall back down here, we can obviously hop out of the trade or take part of the position off at least on this position. But right now we're trailing our stops up, and we just want to see, 42.51. We'd pretty much get back most of our profit if it fell back to that level. So let's watch it. Let's see. And like I said, we can always close out some of the position that doesn't break on up. But I would be surprised if it didn't hop up and hit that point of control. So that's just what I'm watching right now, sort of having a visual price level target based on volume, based on settlement. And but if it shows this as a valid point of resistance there, then we'll follow it. It did just bust it by a tick. So let's see what happens. Okay. Now, back on over, switching gears on you a couple times today, back on over to this iron condor straddle setup. We talked about in the last segment how a straddle may not quite be the best idea, okay? But a condor made a lot more sense because it gave us a wider area where we break even or profit. Whereas, so it doesn't have to move, or it can move, and we can still make money. Whereas a straddle, it had to move quite a bit for us to make any money. And I went over the ticks and the dollars and all that in the last group there. But it had to move quite a bit for it to be profitable. And if you can, when you look at this, the last thing I was saying before we went on off air there, I was talking about how people see $125 risk, $129 risk by going the opposite direction of these trades. Again, you can only lose on one side. If you sit down and if you spend a couple hours and do some math, you'll realize why I love these condors so much. So check them out, look at them, and see if you have that aha moment. And I look forward to hearing about it. Y'all have a great day. I'll see you tomorrow right here on the Diagnostics Trading Hour. We're going to tighten those trades up to 42.64, okay?
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.